What's up, everybody? Welcome to another episode of the Stock Bros Podcast. My name is Tony. So today we're going to talk about the advice that I would give people when there is a stock market crash or a market correction or even just a bad day or a bad week in the stock market. These are going to occur. There's just no getting around it. We're all going to experience a stock market crash at some point. And one of the things that I want to start off by saying is I want to give you a quote from Warren Buffett. He said, "The stock market is a device for transferring money from the impatient to the patient." So let's break down what this means. Those of us that wait and hold during the crashes and the corrections and you keep buying into the dip, almost always, actually 100% of the time throughout history, it is paid off. So I'm going to break down 3 tips that I would give people to kind of stay calm during a market crash. The first tip is don't check your portfolios all the time. This is one of the worst things you can do because the market is fluctuating constantly all day long. So investing should be boring, right? This is going to drive you to go crazy if you're constantly logging into your account to see where your investments are. Now, this is all about, you should be thinking about a long-term goal in the future. What are you trying to accomplish by investing? If you're a day trader and you're just trying to quickly flip stocks for profits, then maybe you should be concerned about a market crash. But if you're an investor like myself, where it's just a buy and hold strategy, you set it and forget it every week, then you should not be panicking. Do not worry about the fluctuations from day to day. Now, I use an approach where I dollar cost average. So I buy into ETFs, which many of you know, they're exchange traded funds. It's one fund that holds a whole bundle of different companies. I buy into those every week. And what I'll do is I'll throw like $25 a week into a bunch of different ones. And I do this every week, whether the market's up or down, crashing, it's soaring, it doesn't matter. You just keep doing this. This is called dollar cost averaging. Now, let's go on to my second bit of advice. If the stocks are tanking because of a market crash or a market correction, or maybe it's just a bad day, do not panic sell, okay? Do not panic sell. Hold the course. If you hold good companies, they will come back. In fact, when the market is crashing, it's a great time to buy valuable companies at a discounted price. We all saw what happened in March in 2020 last year, where the market lost about 30% within like a month. I think it was the quickest fall that we've seen in market crash history. And it all came back and more. It rebounded very quickly. Now, that's not going to happen all the time because since the 1940s, on average, it's taken about 1.5 to 2 years for the market to recover from a crash. So usually it's about a 1.5 2 year bear market period where you may not see a lot of growth and maybe a lot of downside, but it always comes back after the 1.5 2 year period. So we kind of got lucky this time where it rebounded so quickly. I wouldn't expect that every time. But yeah, so don't check your portfolios all day long. Don't panic sell. Now, the final point I will make, and this is probably the most valuable point that I will make, is during a market crash, it's a really good time to evaluate the companies you own. Do you have good investments? Are you diversified enough? So as far as how to evaluate if you have a good investment, how many of you have actually checked the company's financial records that you're buying into? How much debt do they have? If a company is buried in debt and their debt to income is lopsided, it may not make a lot of sense to be investing in that company, right? So what's the price to book value of that company? What's the PE ratio? What's the earnings per share? What's the dividend history? How good, and this might be one of the most important factors, is how good is the company's leadership? What are the values of the CEO? What's the track record of the CEOs? So that's all important information you should think about. Now, let's go on to as far as diversification. Now, I prefer ETFs, but for those of you that buy individual stocks, how many stocks in different sectors do you own? So, do you own a bunch of pot stocks and shares of ZOM? Then you're not diversified. You want to have some. You might want to have some stocks in IT, in tech. You may want to have some healthcare stocks, financials, consumer discretionary stocks, communications, consumer staples, energy, utilities, real estate, commodities, materials. There's so many different sectors of the market. So how diversified are you? If you own all tech and say we're having a bear market for tech and tech is on a downside, which I can't see this happening, but let's just say that for the sake of argument, and you own all tech, you're going to be in a lot of trouble. It may take a long time for your money to rebound. So that's diversification. Also, are you diversified by investing in different countries, different regions of the world? Do you own only U.S. companies? Do you own only international? I say international because I'm in the U.S., but do you own only international companies? You should have a nice mix, right? You should have some U.S. stocks, some international stocks. You may want to have some bonds. A lot of experts recommend having, the 100 rule for bonds, where you take 100, you subtract your age. And, if I'm 33, let's say I'm 30, then I should have 70% stocks, 30% bonds. Now, I don't really follow that rule, but that's what the experts say. And, they're smarter than me. So you may want to look into that. Do you own any commodities? It might be smart to have some gold and some silver. I know cryptocurrency is a big thing right now. Maybe you want to have some Bitcoin. So it's smart to spread your money around. You don't want to have all your money in one basket. The old saying, you don't want to have all your eggs in one basket. So those are my recommendations. And here's the bottom line. Don't constantly check your portfolio. It drives you crazy. Don't panic sell during a bad day or a crash. And use this time to evaluate what you own and ask yourself, are you diversified and do you feel good about what you own? So I hope that helps. For those of you that are overwhelmed with investing, you may want to check out my link. I have Acorns in the description. I love Acorns. I have a lot of people using it. I use it. And it's all pre-made portfolios that are full of ETFs. So it's very diversified. And it's all pre-made. You set it and forget it. So, but if you have any questions or comments, just leave them in the comments below, and let me know what you think. And feel free to message me as well, and let me know how diversified and how safe you feel during a market crash. All right, thanks for listening.